Assalamualaikum, my name is Zaira binti Abdul Muttalib and my match number is 078291. So for introduction, the main objective of this assignment is to apply market sentiment, fundamental analysis and business prospect analysis in a real trading environment. For our trading approach, we have choose an active trading strategy with 3 to 5 trades per week and a maximum holding period of 5 days, focusing on short-term price movements. We use M+ to execute paper trades and TradingView for chart analysis and technical indicators. In terms of portfolio approach, we apply diversification across different sectors while focusing only on Sharia compliant and liquid stocks to manage risk effectively.
My name is Zahratul binti Muhammad Yusuf. My matrix number is 077586 and I will talk about the money management. In the virtual trading simulation, our 500,000 capital is managed through active short-term strategies, focusing on two things, which is risk control and return on maximization. We avoid concentrating all of our fund in a few positions by using tactical position sizing and sector diversification. We diversify our investment into utilities, plantation, manufacturing, telecommunication, and semiconductor, so we can ensure balanced exposure and reduce risk. The first category is low risk category. We allocate our money about 120,000 into these three companies, which is TNB, Mr. DIY, and IOI Corporation Berhad. Next is the medium risk category, which our group allocated about RM96,000 ringgit into Inari Ametron, Gamuda, Press Metal, and Axiata Group. And lastly, the high risk category. We allocated about 82,000 ringgit for companies like Top Glove, Farm Fresh, and BM Green.
Alright, first, Tenaga Nasional Berhad. We selected Tenaga Nasional Berhad because it is a fundamentally strong and defensive stock with consistent dividend payments and also stable cash flow. Although overall market sentiment was uncertain, Tenaga Nasional Berhad benefit from insider-related news and its position as a regulated utility. Technically, the stock was moving within a consolidation pattern, allowing us to apply a buy near support and sell near resistance strategy. Tenaga Nasional Berhad was chosen for its low risk profile and predictable business model, suitable for active trading during volatile market conditions. Next, we have Farm Fresh Berhad. We selected Farm Fresh Berhad because it shows positive short-term market sentiment, supported by stable earnings and dividend declaration. Fundamentally, the company has consistent revenue growth, a reasonable payout ratio, and also a strong consumer brand in essential dairy products. From a technical perspective, the price was in a clear short-term uptrend, trading above key moving averages with strong momentum. Overall, Farm Fresh was chosen for short-term active trading due to solid fundamentals and positive price action.
The third company that we chose was Gamuda because the construction sector growth contributed by data center construction and major domestic projects. From the investor perspective, analysts were generally optimistic as Gamuda maintained a strong order book and expanded its segment. Fundamentally, Gamuda has a high PE ratio, which is 30.6, which is high compared to the market average. The ROE is 8.42%, and it has also have a strong order book about RM38 million ringgit. Next is the payout ratio. The payout ratio are from 43% to 57%. This shows a strong cash flow and management confidence in sustaining long-term investor return. Technically, Gamuda RSI stands at 46.50, placing it in the neutral zone with balanced buying and selling pressure. The support level is RM5.39 ringgit and the resistance is at 5.46 ringgit. Overall, Gamuda Berhad is a leading Malaysian engineering and infrastructure firm, is strengthening its global presence with a 37 billion order book and growing demand in both domestic and international markets. So the technology leadership, highlighted by the world's first autonomous tunnel boring machine, helped secure the 6.5 billion ringgit Sydney Metro West project. So looking forward, Gamuda is diversifying into a data center and transportation system, so it gains attention from market analysts and investors. So the industry outlook remain positive. Next, the number 4 company that we choose was Inari Ametron. So Inari Ametron was bought on 17 November and sold at 20 November. We only have RM 0.01 gain. The company is in the technology sector. Fundamentally, Inari Ametron has an earning of 0.01 EPS, which matched forecast, and has a revenue of RM 325.8 million. So this shows an efficiency of a strong cost control and stable profitability despite revenue slips. Technically, Inari have a price movement dip to RM 2.34 ringgit, which rebounded to RM 2.41 ringgit, improved by the global sentiment. Inari has a double bottom chart pattern formation supported by the moving average. The key levels of Inari was support at RM 2.41 and resistance at RM 2.53. Overall, Inari has a heavy investment in system in package and edge AI, which is one of the biggest growth drivers. And they have also regional footprint, which is expanding its operation in Malaysia, China, and the Philippines. The supply chain, which is they are the key supplier for Broadcom or Apple, which is currently diversifying to mitigate volatility. And lastly, the policy support. They also benefit from Malaysia's pro-semiconductor initiative.
Hi, my name is Aisha Adlina binti Azman. My metric number is 077147. So for this slide, I will be presenting the analysis of Top Growth Corporation, which is covering the market sentiment, fundamental analysis, technical analysis, and also the firm's future prospect. So first of all, in terms of market sentiment, the investor sentiment towards Top Growth was neutral to slightly positive. The stock traded around RM 0.585 to RM 0.59, indicating support from low price buying opportunities. However, the investor remain cautious due to ongoing competition, margin pressure, and the impact of the ex-dividends effect. So overall, the sentiment reflected short-term trading interest rather than strong long-term conviction. So next, looking at the fundamental analysis, the Top Growth financial recovery remains gradual. Earnings per share are still weak, and the company's high price to earning ratio reflect growth expectation rather than the current performance. So dividend yield remain moderate, and return on equity is still low, indicating that profitability has not fully recovered. Despite this, the company maintain a strong liquidity position, which support its ability to sustain operation during the recovery phase. So next, moving to the technical analysis, the stock shows a bearish trend where a head and a shoulder patterns is visible, which signal a trend reversal from the bullish to the bearish. The downtrend is confirmed by lower heights and lower lows, and the RSI is below 50, indicating stronger selling pressure compared to buying pressure. But at the support level are identified around RM 0.56 to RM 0.61, while resistance remains near RM 0.68, limiting short-term upside potential. So last but not least, regarding to the prospect of the firm, where the Top Growth has a moderately positive long-term outlook. So the company is expected to benefit from post-pandemic demand recovery and improving global market condition. However, remain due to oversupply, price competition, and cost pressure. Therefore, the stock is more suitable for cautious investors who are willing to tolerate short-term volatility while waiting for the earning recovery. So, for the conclusion of this, where the top graph is currently in a weak short-term pace dominated by selling pressure, but while its long-term fundamentals show a recovery potential, the investor like us should closely monitor trend confirmation before making a long-term investment decision. Next, for Mr. DIY, in terms of market sentiment, where the investor sentiment towards Mr. DIY during the period of 27 to 28 November 2025 was cautiously optimistic. This optimism was mainly driven by strong investor confidence following the company's solid result with nearly 12% year-on-year profit growth. So the profit increase was supported by new store opening and stronger ringgit performance, which helped reduce import costs. However, despite this positive sentiment remained cautious due to inflation concerns and cost of living pressure. So, the investment strategy focus on short-term positioning, buying on 27 November and selling on 28 November 2025. So next, for the fundamental analysis, Mr. DIY show the strong business fundamentals, where the company follow a rapid store expansion strategy, which helps increase market reach and economies of scale. So it is a low price strategy attract price sensitive consumer, making it relatively defensive during economic slowdowns. However, there are risks such as flat same store sale growth and exposure to exchange rate fluctuation. So the stock has a high price to earning ratio, indicating a strong growth expectation, but also making it sensitive margin pressure. So overall, the investment outcome was short term loss due to daily price volatility rather than weak fundamentals. And the last one is technical analysis, where the stock experienced a shift from an uptrend to a downtrend. So in this company, for this technical analysis, it showed a head and shoulder pattern was formed, which is a bearish reversal signal. So the downtrend was confirmed by lower heights and lower lows, with a previous support level turning into the resistance. So selling pressure remains strong, indicating limited short-term recovery. So the technical indicator suggests that investors like us should closely monitor support level before considering any rebound opportunity. So for the conclusion of this company, although Mr. DIY has a strong long-term fundamental, short-term market sentiment and technical indicator justify a cautious and the short-term trading approach.
Next, for company Press Metal Aluminium Holding, for market sentiment, strong bullish sentiment. Aluminium price remain robust due to surging demand from electric vehicle, data center and the global transition to green energy. Investors maintain an optimistic long-term outlook, supported by the company's resilient profit potential despite global economic uncertainties. Next, for the fundamental analysis, a high ROE of 21%
6.32% demonstrate precious metals' strong capacity to generate shareholder value through efficient operation. Then, the PE ratio of 28.34 reflects high investor expectation for future growth, driven by rising demand in the EV and renewable energy sector. For the technical analysis, the short-term price trend has shifted from an uptrend to a downtrend, shown by the formation of lower highs and lower low, indicating increasing selling pressure. Then, resistance at RM 6.82 to RM 6.85 remains strong, and the support is weakening. Overall outlook remains bearish unless resistance is broken. For the business prospect of the firm, this company show that well positioned for medium to long-term growth, supported by strong global aluminium demand. Growth driven by renewable energy, electric vehicle and data center, especially in value-added products. Despite market risk, investor sentiment remains cautiously optimistic with a positive long-term outlook. Next, for company BIWM5A, the market sentiment is currently attracting significant attention in the market, underpinned by a notably bullish outlook following a positive research report from Maybank Investment Bank. This endorsement from a reputable institution has bolstered investor confidence, positioning the company as a primary beneficiary of Malaysia's green energy transition. The broader market sentiment is increasingly optimistic of renewable energy and water management. Next, for the fundamental analysis, the company has hybrid strong financial health and efficient management. With a PE ratio of 16.53, the stock reflects a fair valuation, offering a sense of price stability that is often rare in high-growth tech sector. This is further supported by a return on equity of 12.75%, which demonstrates management ability to effectively generate profits from shareholder capital. This company operates in ESG, environment, social and governance, and carbon reduction and green energy trends. Next, for the technical analysis, currently the stock is navigating a downtrend characterized by a series of lower highs and ongoing selling pressure. The support level at RM 1.45 to RM 1.47 is repeatedly tested, reducing its strength. Overall, the stock is in weak technical position. A breakout above RM 1.50 and stronger RSI momentum are needed for a bullish reversal. Next, for the business prospect of the firm, the long-term value proposition is perhaps best highlighted by the strategic acquisition of Plus Energy Holdings. This move has been transformative, expanding BIWM5A capabilities into solar generation, energy storage, and sophisticated efficiency solutions. By controlling a full clean energy value chain, spanning bioenergy, water treatment, solar and storage, the company has created a significant stream and ensured that BIWM5A is equipped to capture every stage of the green energy life cycle, making it a formidable player in the years to come.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Mariam binti Azhar. My metric number is 076703. So I will explain for the market sentiment for IOI Corporation. During 1st to 5 December, the share price is show a slow increase from RM4.03 to RM4.11. This indicates that investors were cautiously confident. This positive sentiment was supported by higher quarterly profits and mature palm trees, which are expected to increase production. IOI also announced plans to diversify their business with solar energy projects and new products like biomass and coconut-based items. Overall, the market sentiment was cautiously optimistic, reflecting confidence in IOI's stability and long-term potential. So looking at the fundamentals, IOI shows strong profitability. Its returns on equity, which is ROE, is 13.17%, which means management is efficient in using shareholders' funds. The price to earnings ratio is around 15.38, which indicates the stock is reasonably valued. A lower PE reflects better alignment between price and earnings, which improves investor confidence. In summary, II has healthy profitability, efficient management, and acceptable valuation, making it suitable for medium to long-term investment. So II operates mainly palm oil and resource-based manufacturing. Its strengths include stable global demand and an integrated supply chain, which supports efficiency and cost control. So looking ahead, IOI's prospects are moderately positive, influenced by palm oil price, export demand, and sustainability practice. However, challenges such as commodity price fluctuations, environmental regulations, and labor costs exist. Overall, IOI is expected to maintain stable performance, supported by consistent demand and its strong industry position. Technically, IOI shows a clear uptrend. The moving average down and the blue line on the chart confirms the upward trend. The price is trading above the MA, which indicates bullish momentum. During small pullbacks, the price remains above or close to the MA, which acts as dynamic support. The breakout from 4 ringgit support and consolidation above 4 ringgit and 10 cents. So the resistance suggests the market is stabilizing and may continue its upward movement. In conclusion, IOI is in a short-term bullish trend supported by strong technical indicator. So now I will explain for market sentiments for Axiata Group Berhad. For Axiata, during 1st to 5th December, the share price slightly declined from RM2.62 to RM2.56, indicating a neutral to slightly negative sentiment. Investors were cautious due to the recent Celcom-Digi merger, which created a strong telecom company and led to a special dividend. Although the company reported better profits and reduced debt, investors adopt a wait-and-see approach due to uncertainties in the telecom sector. Overall, the sentiment can be described as hopeful but cautious. Looking at fundamentals, Axiata faced some challenges. The PE ratio is extremely high at 134, suggesting earnings are low or volatile relative to share price. The ROE fluctuates between negative 0.7% to less than 5%, indicating low efficiency in generating returns. Negative ROE periods show the company is not creating value for shareholders. In conclusion, Axiata earnings are unstable, making it a higher risk investment, especially from a Sharia compliance perspective. Technically, Axiata shows signs of price recovery after a previous downtrend. An inverse head and shoulders pattern is observed, which is a bullish reversal signal. The breakout above 2 ringgit 0.57 and 57 ringgit and 57 to 2 ringgit and 58 cents confirms the upward momentum. The support level at 2 ringgit and 55 cents shows strong buying interest, while previous resistance at 2 ringgit and 58 cents to 2 ringgit and 55 cents now acts as support. The RSI is 67.83, indicating strong bullish momentum without being overbought. So overall, Axiata is in a short-term bullish pace. Axiata is a leading telecom company in Malaysia and Southeast Asia with a large customer base and well-established network. With growing demand for mobile data, digital service, and 5G, Axiata has opportunity to expand and increase profitability. Investment in network infrastructure, digital platform, and fintech supports this growth. Challenges include competition, regulatory change, and economic fluctuations, along with pressure from global digital platforms. Overall, Axiata has a positive long-term outlook with steady growth potential and a strong competitive position. That's all from me. Thank you.
Next, this slide shows our group trading log, which record all buy and sell transactions made during trading period. First, for company Farm Fresh Berhad, our group execute a buy on 17 November at RM 2.42 when there was increasing price trend supported by stable earnings and dividend announcement. Then we sold the stock on 20 November when the price moved above the key moving average, indicating a suitable exit point. Next, for company Tenaga Nasional Berhad, our group bought the stock near a short-term support level at RM 13.36. The stock was sold at RM 13.14 when the price approached resistance and showed signs of hesitation. Then, for Inari Ametron Berhad, the buying decision was based on strong bid dominance, with bid volume reaching around 55%, indicating strong buying interest. The stock was sold near the resistance level at RM 2.43 due to increasing selling pressure. Next, for Gamuda Company, our group entered a buy position on 24 November at RM 5.39 following a pullback within an ongoing uptrend, indicating potential trend continuation. Then the stock was sold on 27 November at RM 5.46 when RSI showed signs of weakness and the upside momentum began to fade. Next, for Top Glove Corporation, our group bought the stock on 24 November at RM 0.585 after the price stabilized and showed a shift toward bullish momentum. The stock was sold the following day at RM 0.59 when it reached a resistance level and began to lose upward strength. Lastly, for Mr. DIY, our group initiated a buy on 27 November at RM 1.57 based on RSI recovery at around 45.69, which suggested a possible technical rebound. However, the stock was sold on 28 November at RM 1.52 after RSI declined further to 41.65, invalidating the trade setup. Next, for Press Metal Aluminium Holdings Company, our group entered a buy position on 1 December at RM 6.75 when the RSI moved above 55, indicating potential bullish momentum. However, the stock was sold on 5 December at RM 6.70 after a price pullback in order to avoid further potential losses. Next, for BM Green Tech, our group bought the stock on 1 December at RM 1.47 near a key support level within a stabilizing uptrend. The stock was later sold on 5 December at RM 1.46 when the RSI dropped below 55, signaling weakening momentum. For ROI Corporation Berhad, our group initiated a buy at RM 4.08 when the RSI rebound to approximately 51.47, reflecting early bullish trend. The position was sold at RM 4.10 after the price approached a resistance level and showed sign of momentum exhaustion. Lastly, for Axiata Group, our group bought the stock on 3 December at RM 2.55 due to an oversold RSI condition expecting a technical rebound. The stock was sold on 5 December at RM 2.53 when it failed to sustain a bullish trend.
Alright, for reflection, this virtual trading simulation provided practical exposure to active trading by applying market sentiment, fundamental and technical analysis in real market conditions. It enhanced our understanding of risk management, diversification, and strategic decision making, despite challenges such as market volatility and emotional control. The experience improved our analytical skills and offered realistic insight into professional investment practices. Thank you.
This portfolio, an initial capital of RM 500,000 was invested across multiple sectors, including the energy, consumer goods, healthcare, aviation, plantation, construction, and telecommunication. So this diversification strategy was applied to reduce overall risk and avoid overexposure to a single sector. Overall, the portfolio show mixed performance during the trading period. Defensive sectors such as healthcare and utilities provided stability during uncertain market condition, while cyclical and growth sector, including aviation and technology, experienced higher volatility. Commodity-related sectors, particulars, energy and plantation perform relatively better due to favorable market condition. Although some stock recorded the short-term losses, they were partially offset by gains from stronger performing sectors. So, in addition, the presence of unutilized cash helped maintain portfolio flexibility and limit downside risk. In conclusion, the portfolio demonstrates the performance of diversification and prudent asset allocation in achieving to balance risk and return.